Hi, welcome to the Market Alert for Thursday, the 13th of February 2025. So, surging CPI slams stocks and bonds as rate cut hopes evaporate. Gold and Bitcoin bounced back yesterday. Inflation's hot, too damn hot apparently. And rates rising, inflation inflating, and King KWEB reigns. KWEB has been one of the sexiest tech stocks index plays of a while. According to the news there, US stocks saw two-way trade after hot CPI data and geopolitical optimism, and bonds sold while stocks and dollar chop to hot CPI amid later Trump geopolitical updates. And yesterday's numbers, you can see there the core CPI came in, well, all of them came in hotter than forecast, only by 0.1, but I suppose on a national basis that's a bit of an issue when prices are increasing. But that's if you can believe the numbers anyway, to be honest with you, which is what Trump's looking into as well as everything else that he's looking into in the US as far as the previous government's corruption. So, as they've always been known as the CPI numbers, it wouldn't surprise me. We certainly know that the numbers are higher, but I suspect that even Trump wouldn't release the true figure of what inflation really is. Anyway, that was yesterday. So today, what have we got? GDP from the UK at 7 a.m. Then we've got preliminary GDP as well. Core PPI from the US and PPI month on month as well. And then the unemployment claims, which are a weekly number. So let's have a look at the market's reactions to this yesterday. It didn't take a lot for the market to recover, let's put it this way, after a shakeout. So let's kick off with the Dow and then work our way through to all of the other markets. So in the daily chart, you can see the market shook out, then recovered and is starting to make its way back to the upside. But let's look at this in more detail there. You can see this big shakeout down to the S2. And then the market reversing and then making its way back. Not as much as other markets, which we'll look at in just a moment. But nonetheless, it didn't take long, did it, for the buyers to come in and move the market back to the upside. And to say the full potential still to make a new all-time high. The buybacks at the moment in the US stock markets are 50 billion per week. And what happens, I suppose, is the only question to ask is what happens after the buybacks dry up, because that's the only thing that seems to be moving the markets to the upside at the moment. And German DAX, well, there's no end to it, is there? We got another new all-time high as I'm recording this morning at 22,421. What did I say was the next target? It was going to be 22,500, and we're nearly there. Nearly 500 points over the last couple of days as this market continues to surge to the upside. There's the shakeout. That's, believe it or not, that's yesterday's CPI number. So how much has the market put on since this yesterday? Again, the insanity continues, but up to the current position, the market has put on 458 points from that low to high, obviously going back below the 22,000 significantly by 100 points, and then putting on those others. So 400 point range. For over a 400 point range for yesterday's low to the current high. So there's no stopping the markets moving higher, even despite the inflation numbers. In the S&P 500, same thing, down to the 50 EMA, despite a bit of selling there, market recovering and then moving back to the upside. As you can see there, big sell-off, take out all of the stops, classic shakeout action that is. And then bring the market back, and you see the green there as they bought the market back and tried to bring it back to yesterday's high, which is this one here, but failed to do so, but not far off overnight there. Meanwhile, the insanity continues in the UK as well, with the FT100 making a new overnight all-time high as well. I think it is. Let me just double check. Drag that one there. Yeah, so we got a new all-time high as well in the last 10 minutes. Don't be surprised if the markets have a bit of a sell-off first thing this morning with this sort of overnight activity. But the whole thing has become insane. It's just not doing what it's supposed to do anymore. You know, it's completely disconnected. Again, you can see there, shakeout in the FT100, market up. We've been up overnight, and now we're settling by the DP as well. There's absolutely not a cat in hell's chance based on true fundamentals. These markets would be at these levels, but fundamentals don't matter anymore. it's all about pumping the markets to the upside. So in the US dollar, this down yesterday, which is a surprise because the potential for rates to go up because of hot inflation is the other way around. It's good because rates increasing is good for the currency, but yesterday the market's down. And this, of course, has had an impact on the metals as well. So let's have a look at those. And starting off with silver, managing to move up yesterday. A bit of supply coming into the market, but being allowed to move higher. Why we are not at $50 an ounce is beyond me. When gold, if we just have a quick look, is still making new all-time highs from the other day and now making its way back. But silver, no, not a chance. They're suppressing the price. You can see there that they managed to buy back in yesterday with the CPI numbers, but now struggling. So don't be surprised if you get a straight reversal on this price during today. However, I'm hopeful and that we actually get a break out of this sideways move, and prices are then allowed to move higher. But we should be way beyond $100 now with the current gold price, but we're not. So let's have a look at the gold-silver ratio. Down yesterday, but don't be surprised if we head back up towards the 94 area. We've got to take out 92 on the upside, which would see the silver price move sharply lower. So let's hope that the 92 level is actually some sort of ceiling for this market. If you look at a weekly chart, you can see there that we have got some sort of a ceiling in place there that goes back to January 24. So have a look at a monthly chart of this. It would be a lot easier to see. So there's your bigger picture for the gold-silver ratio. That goes back to COVID, which I mentioned many times before. But otherwise, we're stuck at this sort of level there. So if we break this, then we go to whatever the high is of this bar. Let's have a look at 96 there. So we could go to 96 and then silver moving down sharply lower. But we've got a pretty good chance at the moment of, with gold continuing to move higher, that the gold-silver ratio has found a bit of a ceiling there at the moment. And again, depending on what goes on with the gold price, I've seen a few videos now where they're talking about repricing gold, revaluating gold, whether that happens or not, to $10,000 an ounce. Well, if that happens, then silver's got no choice. It will just be one vertical spike through the all-time high of $50. And that'll probably be about the limit, to be honest with you, given the manipulation. But that's saying that with the shortage of gold, we're trying to get the gold delivered back to the US at the moment from the Bank of England and from the LBMA is proving to be a little bit tricky. And if there is any revaluation, it's not happening next week. It's going to take some time for that to even be pulled off. So don't expect anything on that front too soon, as it would have a massive impact on inflation. And we've seen what the inflation numbers did yesterday as well. So anyway, let's move along. You can see there, as gold heads for 3,000, Bank of America digs into intensifying market dislocations. Gold can average 3,000 an ounce this year if the investment demand increases by just 1%. For it to hit 3,500, investment demand would need to rise 10%. I think there's a bit more to be played here than just investment, based upon what Trump was saying at the end of last week with regards to the asset side of the Fed's balance sheet and how they could monetize it. So that could quite easily happen with the revaluation of gold, but it's the impact that it will have is the issue. Right, let's have a look at yesterday's trades. So just the one trade, market sideways to lower and then kicking off a bit to the upside when the market opened. Then we get a bit of a sell there, as you can see, and then prices making their way back above the high, because we've got to keep the market now above 22,000, which we did. We saw some profit taking and then back above it, and you'll probably see a bit of profit taking to start with this morning as well. And then we had a potential buy signal that wasn't filled, market moving sideways, and that's the way it remained for most of yesterday until we had those CPI numbers which came out there, which if I just let it play out for a few seconds there, you'll see the market's reaction to this as it fell out of bed, straight through the 200 MA close, 50 EMA as well. So let me just drag this forward a bit just to speed things up. And there you can see how that transpired straight down 100 points, and then the market starting to turn around from that. So you'll see immediately they're buying back in and bringing the market back to the upside there. And then in the afternoon, it was a one-way bet. The market just continued to move to the upside and made a new all-time high. And then we've had new all-time highs overnight in the DAX as well. That was a big bar and an interesting bar, 50 points in 2 minutes before the market then stopped. And again, soon found support. Buyers came in, market up. So yeah, it's this constant, at the moment, shakeouts and buybacks moving the markets to the upside. And finally, overnight, again, we've had the same thing. This is, again, unprecedented. You don't get this at 6 o'clock in the morning. You know, this is a 70-point move or in that sort of region. Let's just have a look from the low to the high is 71 points. There you go. So yeah, you don't get that. So something strange is going on in these markets without a doubt. So let's see what happens later. We're already through the high. We've got the R1, the R2 and the R3 on the upside. We've also got that 22,500 level, which is just there by the R1. Piece of cake. It's only 100 points. And that will be well and truly 500 plus points for this week that the market's piled on. So the overvaluation of these market continues, and when the day of reckoning comes, it's not going to be pretty, to say the least. Okay, that's it for this one. Let's see what happens during today. No major news items, so again, expect a bit of weakness to start with, unless there's follow through on this news, which I don't know what it is. But otherwise, a bit of a shakeout, take some profits, and then the market move back to the upside. Right, that's it for this one. Have a great day, and as ever, thanks for watching. See you in the next one.